Hi there. So, what I wanted to show today quickly was focusing on interest rates and what that actually looks like as a finance broker when we're looking at the total loan costs and not just focusing on the interest rates. So, pulling up our platform, you can see here we're just going to look at the variable rates and we're going to look at owner-occupied rates. A loan size of 500,000, and to keep things simple, let's just say it's an 80% LVR. So when we bring up the list of products, generally speaking, our platform sorts it in ascending order. So there's two rates here. We look at the first rate is the first rate, and sometimes that's the only rate. If there's a second rate, that's the reversionary rate. So in this particular case, Westpac is offering something for 3.59% only for 2 years, and it rolls over to 4.59% for the remainder of the term. It's a 30-year loan term. Now, if we just quickly pick a few of these, we won't double up on the products, but we can probably have Bank of Melbourne. So once it loads up the products, we'll be able to see what the loan costs are in ascending order. So there's a comparative saving here, and the most expensive item is the Westpac Flexi First option for 2 years introductory rate, and the cheapest option on the left here, comparative saving of 88,000 over the 30-year loan term. So one thing that I wanted to focus on or show is how the interest rate may not be, it's a large component of the cost of a loan, interest costs, but there are also items such as your setup fees, monthly or annual fees, which can add up to make a credit product more expensive. So in this case here, you can see that these two are the cheapest at 3.59 and 3.60, but here we have a scenario where these rates are lower, but we have a 3.65%. So looking into that a little bit deeper, and we can see that there is an annual fee on these two loan products, and the comparative saving is almost looking at maybe $8,000 difference over the 30-year loan term. So when you're looking at an interest rate, focusing on just the interest rate as it isn't the best indication. There are comparison rates that you can go off, but even then they're skewed based on a 25-year loan term and generally 150,000. So when you're looking at loans, as a broker, we tend to look at it from a total loan cost, including any additional fees or charges that are applied, as well as the interest rates. So that's just one thing to take into consideration if you're out there shopping for a home loan, and that's the tip for today.